Welcome to The Drawdown, a podcast by Cherry Bekaert's private equity practice. In each episode, we explore the latest trends in the private equity sector, as well as challenges and opportunities in the ever-changing investment environment.
Hi, everyone, and thank you for joining. My name is Liz Slabaski. I'm a director in Cherry Bekaert's Transaction Advisory Group. And today I'm joined with a few of my colleagues as we discuss what it's like to be owned by a private equity firm. Recently, we've been getting a lot of questions from our clients who are interested in selling their business, and they want a better understanding of what to expect, especially when it comes to private equity. So to help paint a picture, we've rounded up a few members of our transaction team who each have a unique perspective of working closely with a private equity firm, either working with the investment team or as a portfolio company. To kick things off, I'll ask each of them to introduce themselves and give a quick background of their experience. Then we'll get into some questions at hand. Sydney, why don't you kick us off?
Sure, thanks, Liz. So my name is Sydney Glick. I'm a partner in our transaction advisory group. Prior to Cherry Bekaert, I worked for a number of years at one of the largest public leverage buyout firms. When I started at the company, this is probably back in 2000, we had about 550 million assets under management, and then grew over the next 11 years to about 28 billion. And at the time, we had a portfolio of over 200 companies. So interesting, have a lot of background on working within a private equity firm, as well as on the other side as an advisor to private equity firms and clients.
Great, thanks, Sydney. Jason?
Thanks, Liz. My name is Jason Painter, and I'm a managing director in the transaction advisory practice. Prior to joining Cherry Bekaert, I spent the last 13 years as the CFO of a distribution company. When I originally joined that company, it was owned by a small number of individuals. And shortly after joining, they sold a minority ownership stake to a private equity firm. About 14 months following that transaction, the ownership team, along with the private equity firm, sold a majority stake to a larger private equity firm. After about 9 years of ownership that saw us fight through a recession, we were a platform for acquisition. We performed 9 of those during our tenure, and we ended up changing the accounting system. We eventually sold to a strategic buyer that was also backed by a large private equity firm. So I always like to say, I kind of sold myself out of a job, joined Cherry Bekaert, and now assist others in the buying and selling of their companies.
Perfect. And Kim, why don't you please introduce yourself?
Sure thing. My name is Kim Palma, and I'm also part of the advisory services team at Cherry Bekaert. And my background is very similar to Jason's because we both started together in the same public accounting firm, and then I joined him when he took over as the CFO of the distribution company that he mentioned. And so we both worked together through the different changes in ownership with the private equity firms. I also, after leaving that company, I worked for another private equity owned company, and now I serve clients who have private equity ownership.
Great. Well, thank you guys all for joining. Sydney, when is a good time for a company to start thinking about partnering with a PE firm?
That's a great question, Liz. So let me just start out by sort of just laying the industry out a little bit so people understand the breadth and scope of what we're talking about. So there's over 3,500 private equity firms in the US. Last year, despite COVID, there were 5,300 private equity deals that closed last year, resulting in over $700 billion of capital invested. And so when you think about when's the good time for a company to consider partnering with private equity, I think as a business owner, you have to also consider, what are you looking to do? What are your goals? Are you looking for a liquidity event to take some chips off the table, but you still want to remain, with the business? Are you looking for a minority equity deal? Are you looking to take money off the table and retire and sell the business outright in a controlled transaction? Or are you looking to raise debt capital and not dilute your equity down? And there's a private equity firm. There's firms that focus on all of these different structures. within different industries. And I think one of the things that is really critical for business owners to understand is I don't think you want to sort of rush into into a sales process. There's a lot of preparation that has to be done on the front end. And when you think about all these different private equity firms out there, there's a lot of capital sitting on the sidelines that need to be put to work. And so what that means is when a really strong business comes on the market, private equity firms are going to pay top dollar for that business to the extent that it makes strategic sense, whether it's an industry that they focus on, whether they have an existing portfolio company that would make a really strong add-on to acquire the target. And so when you're thinking about, well, how do I prepare my business for sale? There's a lot of different things, and we don't have time to get into all of this, but things that certainly business owners want to consider is you have to make sure your financials are in order. Doesn't necessarily mean that you have to have an audit, but at a minimum, you should be considering doing a sell-side quality of earnings report. You should certainly be considering that from a tax structuring standpoint, things are in order, and that you have a succession plan that's really well thought out. So that could also mean just from a business perspective, if you're looking to retire, do you have a number two at the company that can take over? You've got the right executive management team in place. You have contracts signed by your customers, et cetera. So there's a lot of different things that go into it that certainly we can help assist businesses with, and that we do day in and day out.
That's great. That's actually, Jason, with all the different funding options available, what are the benefits of having a PE firm as an investor?
I think Sydney touched on several of the main points I would also share in answering that question. As he indicated, with private equity ownership, you have options of how much of the business you may want to sell, such as a minority stake or a majority stake. This is a nice option that I think allows owners to take out partial or all the equity that they've built up in their company, and it allows them to diversify their net worth into other investments. Keep in mind that many times private equity ownership is investing in the management team and owners as much as they are the company's industry, and thus they want those individuals to invest alongside the private equity group. I think this allows owners and the management teams to participate in a second liquidity event in future years. Now, one of the non-monetary benefits that I experienced in my years was having access to financing institutions through either senior lenders or mezzanine debt. Private equity does have their own fund that they can borrow from or participate and invest from, but they also have access to financing options from cultivating relationships that their portfolio companies now get to benefit from. Most of these lenders trust the investments that the private equity firms are making into, and thus, as a portfolio company, you get access to many of these lenders that you wouldn't have had access to prior to joining that firm. Another benefit was that the individuals that work at these private equity firms are quite knowledgeable and bring a lot of expertise in areas such as financing, acquisitions, operational management, etc. And these help augment your current management team's expertise. I just like to remember that when I want to brainstorm or help me through a challenge, it certainly helps you to not feel as isolated when you're going through that decision-making process. The last point that I considered when answering this question is that many bring access to professionals, advisors like a Cherry Bekaert that they will introduce you to or bring in when you get into a challenge or an event that may be outside your expertise. Having resources, whether it's internal with the private equity or through advisors, help my company navigate challenges or changes that came from time to time during their ownership.
Yeah, certainly a lot of benefits there, Kim. But one concern that we hear often is if I sell to private equity, what happens to the employees? How did work life change for you?
Yeah, for me and for most of our employees, there really was not much of a change in our day-to-day activities. Our operations, our accounting groups, we kind of all did the same thing as before, just to support our company's business. For me, the biggest change that I saw was in our documentation and reporting requirements. The items that previously our owners had more discretion about, like expansions or budgets or even bonus plans, they were more formalized now, and we were held accountable for them. That seemed to be the biggest change that I saw kind of in how we operated more day to day.
Great. And Sydney, when you worked at a private equity firm, what were your expectations from the companies you had investments with?
So I would say there's a couple things. So companies stumble all the time. There's things that happen that are out of their control, whether customers leave, whether there's more macroeconomic impacts and whatnot. And as Kim mentioned, when a private equity firm is investing in a company, they're investing in a partnership. But at the same time, there's certain metrics that they're expecting the company to hit, and they're really driven by growth, and they're going to do everything they can to support the company in meeting those objectives. And one of the key things is when you do have a bump on the road or whatnot, the expectation is that the private equity firm isn't going to find out by looking at their financials or broken covenants. That management is going to be very transparent and open in providing insight into what's going on with the business. Such that the private equity firm can really act as an extension to that management team and help overcome those pitfalls. I think the other big thing in terms of expectations is timely financial reporting. So a lot of times, if companies that haven't been private equity backed in the past, they may produce financials on an annual basis for tax reporting purposes and maybe on a quarterly basis. There's a lot of information that may be up in an owner's head. And one of the things that a private equity firm is going to bring to the table is just help sophisticate that business in terms of the quality of financial reporting and management reporting, such that the board and key management can proactively make decisions. And so I think having that timely financial information is another critical piece that that we always expected companies to provide.
Great. And Jason, as a CFO, how often were you communicating with the PE group, and what was the nature of the interaction?
So, that, as I mentioned, we were owned by 3 different ones, and it varies for each firm. So what I'm about to say isn't, one size fits all, but typically you will see a lot more communication at the front end as the PE group is learning about the company in terms of its operations and the reporting. They're trying to get up to speed so they understand the dynamics of your company. You will see a lot more scheduled calls. At first, we were meeting on a weekly basis, and most of it was through the phone or video conferencing. But there are usually scheduled board meetings. So you will get into, performance where you'll be meeting live with the board, which typically involves members of the private equity firm, but in many cases, they'll bring experts outside of both the company and their PE to join as board. So that happened on a quarterly basis. And then we ended up producing a lot of what I would consider memos or reporting packages that gave a summary of the month. So again, all of them are different, but you're usually having phone conversations on a weekly, bi-weekly basis. And as you get into more of a routine, it just becomes less frequent. Now, my one caveat through this is if things go bad, then you will see the private equity firm take a little bit more hands-on approach. And that could be through their advisors or directly through the private equity team if they have the expertise.
Yeah, Jason, one thing I would say it's at least from my perspective, and I know you're 100% right in what you say, that it really depends on the firm. But I would say it's helpful for folks to understand that private equity firms, one of the reasons why they are asking for this information, they're not trying to create a burden on the management team. They're really trying to support the management team. But they also have LPs and GPs, limited partners and general partners that they are ultimately that they're ultimately reporting to. And so they have to provide information on the status of their investments and what's going on in their portfolio to other folks. And that's one of the reasons why they're having board calls and whatnot is they have their own reporting requirements that they're responsible for. But at the end of the day, I think at least all the private equity firms that I've worked with and worked for, they don't go through this exercise of senseless, sharing information. It's all for a common goal of trying to help the business succeed.
Yeah, Sydney, just to piggyback off of that one more, you're exactly right. I think they're building a lot of metrics. So as Ken mentioned earlier, the reporting expands. And so they are keeping track of a lot of history so we can focus on acquisitions and how they would integrate into the company, or when we go through difficult recessions or downturns in the economy, how does that impact? And all of that information is quote recorded and maintained. And you really do become a lot more sophisticated in your knowledge of the business and what really makes the company, successful and make money, because all PE firms are investing in you to grow the company and to have a return on their investment.
And I'll just add too that all these reporting and changes and increases that we're talking about, none of it happened overnight. It really was a gradual process where they gave us time to develop these reports. And as our business changed, the reports also developed with those changes, and they just got better and better over time.
That makes sense. So Jason, what should a business owner be thinking about when he's searching for or he or she is searching for a PE firm? Because as Sydney mentioned, there are many out there with lots of different experiences and bring different things to the table. So what should people be thinking about when they make this search?
I think when I review our decision-making process, the key factors that we considered was, first, that type of ownership we sought, whether it was minority or majority. As I mentioned earlier, the first sale we had was a minority where the owners just wanted to take out some equity of the company that they had built up. The second transaction was a majority sale, which was really allowing us to grow and focus on a liquidity event that was several years down the road. A second consideration that we thought through was, what is the private equity strategy or history for how long they like to hold an investment? Now, some prefer 3 to 5 years, some are 7 to 10 or even more. Does this line up with management's expectations and goals? And those should be aligned as you go through the process of making sure your next hold coincides with their typical hold strategies. Another is, how much involvement does the private equity like to have on day-to-day operations? Are they more of a hands-on type firm, or are they more of a macro level oversight? Again, expectations going through the process and making sure they align with management goals is key. But I really think it comes down to the culture and who you felt like you connected with during the process of selling your company. Just remember, private equity firms all have similar goals, which are to grow and have a return on their investment. It really does come down to relationships and who do you think you will be able to work with over the course of the next few years, because this does become a long-term partnership that you're engaging in.
Yeah, I would just add, Jason, to that is I think one of the things that I would always recommend business owners to do as well is when they're talking to a private equity firm, they should talk to business owners that have sold to that private equity firm, just to hear what their experience was working with that firm. And I would, if I was them, I would talk to folks that are in their existing portfolio as well as owners that have already experienced that exit. And then I think the other piece I think is I think it's important to think about private equity firms in terms of they all have different expertise, and a lot of them focus on certain industries. And I think where you can end up with some hiccups is when you have some firms that are investing in this space that they're really not overly familiar with. That's where you can have a lot of, I've seen a lot of frustration where there's just a lot of education that you have to go through to school the private equity firm up.
So Sydney, on that point, where would somebody start? Where should somebody start the process if they're interested?
So I think, look, I mean, one of the obvious answers is you can certainly reach out to any of us at Cherry Bekaert. I think we'd certainly be happy to walk through and talk through people's various situations. I think the other part is talking to an investment banker. An investment banker is a really good advisor that works with companies and helps them sell their business to various private equity firms. So they also have really deep knowledge of the industry and likely suitors out there. So I think either of those options would be a good place to start.
Well, I just want to thank you guys for your time. I think this has been really helpful, and we hope to all of you listeners out there, please reach out to us, or that you guys find the right fit for you, because PE can be a great partner, and it's just about finding the right one. So thanks everybody for their time, and take care.
Thank you for listening to The Drawdown, Cherry Bekaert's private equity podcast. The views presented by our guests do not necessarily represent the views of their respective firms. For more information on how Cherry Bekaert serves as a guide forward to private equity funds and their portfolio companies through accounting, tax, and advisory services, please visit cbh.com.